Hey everybody, thanks for tuning back into Crypto Mainly. Quite a couple of days with Bitcoin. It's gradually, as we thought, just still trickling its way down. Just a couple of points of interest I'd like to share with you today. So we're going to take a look at this chart, the Wyckoff. I'll have a look at Ethereum, the Tether dominance chart. That's not very clear, but the Tether dominance chart, and also the CME chart. So we'll have a look at these charts today on today's show. So please stay tuned to the end. Please obviously like and subscribe, and thank you for those that already have. Got 236 subscribers now, which is great in the space of just over a month, so that I'm really pleased with that, so thank you very much for that. Also, I am on Twitter, at Crypto Mainly is my handle there, and also the NFTs, the sales of those are picking up nicely. The first 10 of those are sold, so the prices have gone up now, but there are another 10 available on the website for those of you that are interested. I've also added the functionality for you to buy the NFT with card, if you prefer to do that rather than buying by cryptocurrency. So thanks ever so much for all your interest in those, guys. Let's have a look at the charts. Okay, so this is an interesting one, a clean chart perspective again, which I like to do every now and again, as I've said to you before, guys. Starting on the higher time frames and working down, you can see this support is one that I've been watching for a long time here, acting as resistance and then obviously support. It had a couple of attempts, sort of bounced along the support line here, failed, came up, and then tried to maintain the support again, but failed. It does look like the price has actually, been sort of toying with this trend line for a while now. But you can see, if you look carefully, the fact that it broke down, it came up, and you've several areas, several days of support there before it came down. Again, came up, broke through, came back down. It's basically been toying with this resistance, but you can see that every time it's come through resistance, it has tried to find it as support there again, and also on these areas here as well. So the fact that the peaks join up nicely there, and coupled with the fact that you've got several days of the price breaking through and then trying to find support on this trend line, does suggest to me that it is a significant one. You've also got the bottom of the wick, the candle body lows here. I appreciate you've got wicks down here, but the candle body lows joined up with this sort of spike low here does coincide with the low of the range here as well. So you've got this wick low here. So all of these three, basically, the wick low, this trend line here, and also this trend line coming down here, all add to this area here as being a potential bounce zone. And obviously, what with the RSI, you've still got a bullish RSI pattern here. So you've got, even if you go by the wick low there, the price action is trying to break down through this, but I don't think it will, to be honest. It might come down a little bit, and then perhaps we get the bounce. If it does come down, break through this support, and then obviously we'll be looking at down at the 29 and 30,000 mark, which there is a lot of buying interest there, but I'm not sure that it's going to get down that far, and we'll have a look at a couple of charts as to why that is. It is possible. Anything's possible, guys. But, just bear that in mind. And if you look at traditional markets, unfortunately, the traditional markets are still taking a hit. So if we look at traditionals, they're all minus 1, 2, 3%, and things is just not looking very good at all in terms of the traditional markets. And of course, that does have an effect on the cryptocurrency world. So unfortunately, guys, we do have to keep one eye on the traditional finance world. And that is having an effect on our cryptocurrency world, unfortunately. But anyway, guys, let's try and keep the hopium alive, shall we? As you know, I'm a long-term bull, and that won't change. So really, this short-term price action for me isn't really too significant. I'm looking at more of the long term. I do try to trade the swings. I'm a day trader myself personally. But my objective is always to try and gain more Bitcoin holdings for the longer term. Sorry, guys, let me explain that more clearly. So I've got a trading portfolio, okay, which is an account which I use to try and trade and accumulate to basically add to my long-term hodl bags. So the trading portfolio is really just to add to my hodl portfolio. My hodl portfolio is mainly made up of Bitcoin and Ethereum, and I've also got a hodl portfolio which is made up of altcoins, mostly blue cap, but there's also a small section in there of high risk altcoins as well. As it stands now, as the prices as they are now, I'm 50% in Bitcoin, 50% in USDT in my HODL account, and my portfolio, my trading account rather. I am waiting to see, what happens from here. I've got some USDT on the sidelines. If we do get any lower than this, if we do get down to the sort of 30s range, I'm going to add to my Bitcoin there. But yeah, so that's the general idea. But let's have a look at the next chart. This is the Wyckoff chart that we've been looking at for a number of days now on the channel. And you can see, as I've said, we're sort of grinding our way down slowly. We've probably, according to this, this fractal, which is some of you that have seen the video before will know it's this area here. It's basically a copy of this bar pattern from this high to this wick high here, and then a fractal of that. And as you can see, it is following it nicely. I mean, it's looking like, even though that it's going to come down to the 30,000 range, and we are breaking the bottom of this range here, which is where I thought we'd find the spring. So you can see that this lower dotted line here, that's at the I think just under 33,000, and we're sort of breaking below this wick low here, which is a little bit of a concern. That sort of suggests if we do get a candle body close below that 33,000 mark, then we could well see the 30,000 level again. But let's see what happens. We've got a long way to go yet before today closes. As you can see there, 9 hours left of today's candle before it closes. And as we all know in cryptocurrency, and lots can happen in 9 hours. Let's have a look at the Ethereum chart. So Ethereum, like looking at this chart here, there is a little bit, it does suggest that we've got a little bit lower to go to get to this wick low. So the sort of breakdown from this rising wedge would normally be the lows of the rising wedge. So that would make sense. I mean, we've got like another 9 to 10% to fall. So I think most of this is going to be money flowing out of the altcoins, which obviously will have an effect on Bitcoin's price as well. But I think that once Ethereum gets down and starts to bottom out at the bottom of this range as well, which incidentally is 2,160, once we get Ethereum down here as well, Ethereum will start to bottom out. Bitcoin is I think bottoming out or very close to it. Let's see what 10% measure is from where we are now. Let's have a look. Yeah, so 10% is actually going to take us down to the 30,000 mark again. Just head down to there. So yeah, I mean, interestingly, yeah, it takes us down right the way down to the red, to the lows of this, of this range here, all the way down to the red dotted line. So if we do get that 10% move from Ethereum and the rest of the market, and it does continue down, nothing's for certain, guys, but it does look like we've got some more room to go to get to the bottom of this measured move here. So if we do, that would mean Bitcoin would come down to the 2930s mark again. And perhaps that's where the bounce is going to come from, because obviously there's going to be a lot of buying interest in there. You've got the big players. They've got their average buy-in at somewhere between sort of 26 and 30,000. So you'd expect them to protect that. But we'll have to see what happens. I think traditional markets are going to play a big part in what happens, unfortunately. Let's have a look at the dominance. Well, USD dominance. Let's have a look at the weekly. If you look at this on a weekly time frame, I think it got the highest close on any weekly, I think, ever of all time, I think, from memory. Let me just check that. Yeah, so we're on a new week today. Obviously, this is last week here, and you can see that it closed. It was the highest candle body close of tether dominance in its entire history. So it's not surprising to see the market still continue downwards. It looks like we might see perhaps dominance coming up to the top of this range now, which is 6.25%. That would make sense. Let's just have a quick look. We've got this wick high here, which we're trying to break through. So again, it'd be a good thing to try and watch how today closes. We've got this wick high here, and we're trying to break above it now, as you can see. But it would make sense just to keep an eye on that and see whether we close today's candle. If it does close above that 5.53%, then it does look like we're going to get another move of another percent higher, which would also, you know, indicate that this is going to play out, where Bitcoin does come down to 29.30, Ethereum does come down to the 21.50 mark, and then, you know, we can have another look at it then. You know, things are looking worrying now, but as I've said to you, you know, many times before on the last videos, it does remind me of this area here. And if you look at this, the price action is so similar. This dotted line here is a weekly resistance level, and these two dotted lines here are the same, you know, areas of interest. The same. The lower one is what would be this dotted line here. So this lower one here at that would be 37,700, I believe. Yeah, so 37.7, shall we say? That's kind of like the lows of the weekly range, and as we can see before, when I've showed you this on previous videos, you can see that, yeah, it's so similar to what happened last time. You know, you got this this weekly support, which the price broke below, and then you can see for the net. So once it had closed below, which happened to us actually at the close yesterday. Yeah, so the close yesterday was here. So that would be the close of the candle here. Okay, this one here. So that's this one here closing below this lower dotted line here. Let me just, in fact, what I'm going to do, let me just put another one. Let me just put that over there so you can see a little bit more clearly. So that's the same line there that we're talking about. And you can see when you start to look at it like this, you know, you've got the first week closing below, then you've got the next week which closed below, and then the following week, you know, you've still got, you know, we're looking at the wicks there, you've got lower still. So it doesn't surprise me that we're getting this action, and I do think that the spring's going to come and we'll rebound heavily, and the spring's going to be, you know, a powerful one. But you know, you have to look at things on a you know, from a sort of sensible perspective, and the fact of the matter is that whilst we're below this support here, you know, these supports which go back, you know, a long way, once we're below that level, I would say, which is at sort of 37,500, you know, that weekly, those weekly lows there. Let me just check that is the right one. Bear with me for a sec. Open, yeah. So 37.7. So 37.7 to 37.8 is the range that we need to get back above, like we did here, for us to like have any hope of there being an accelerated alt season into the summer. On the face of things now, weekly support is broken, and this is looking dreadful, and it's looking like we could fall into the abyss if we lose these, you know, these areas here. The lowest of that range there is 28,750, 28,750. If we lose the low here, then, you know, then there's a huge, there's a long way to fall, and we could see, you know, sort of mid to low 20,000s. I mean, you know, one of the things about Bitcoin is it never, in its history, it's never crossed below a previous high, and that's the previous high there. Just mark that on there so you can see that's the previous high there. And so far, Bitcoin hasn't ever crossed back below a previous high in a cycle, but that's not to say that it can't happen, guys. You know, don't think that it means that it won't ever happen. It might be that this is the first cycle. There are a lot of differences in this cycle and a lot of similarities, but, you know, just bear that in mind. There's nothing to say that it won't cross below 20,000 and continue to go down lower. It's just that the probability is a lot less. You know, that it's very unlikely that happens, based on if we go by previous cycles, is what I'm trying to say. So, you know, but just bear in mind, it doesn't mean that it's a definite given that arbitrary line will definitely hold. It's that, you know, there's nothing to say that it won't fail and prices come tumbling down even further than that. But I remember being in the trading group and telling everybody in my group just to remember how they were feeling in the market here, and do the same here, guys. You know, see, remember how you're feeling. Really concentrate hard on how you're feeling now emotionally, with the prices coming down like this and the altcoins bleeding out. And then, you know, and then, you know, try to remember, make a note somewhere in your diary or something, and refer back to it in a month's time, and see where the prices are in a month's time, when we're into the summer and the sun shines out and everybody's feeling good and spending money and pouring money back into things that they don't really need, you know, buying new cars and new houses and new bikes and whatever else, you know. And we'll see money flowing into cryptocurrency as well, and we will, I think, start to see a nice summer alt season. So moving on to the CME chart here, you can see that there is a gap above us up to 36,000. So obviously that gap will get refilled. So sorry, this is my scribbly trading chart here, guys, but you can see if we look at the smaller time frames here, you know, if we do get a bounce up to 36,000, that is actually probably just likely going to be the retest of this low. Of this the breakdown of the falling wedge there. So if we look where 36,000 is, you know, it's there, which makes sense. It's the highs there. So I mean, even if we do get the CME gap close, it's only going to be, you know, up to this level here, which would make sense with this area of, you know, of interest, shall we say, supply and demand there. So it would make sense that we come up, retest the bottom of this wedge, and then it rolls over again, comes back down, possibly to retest these lows again before we get any kind of action upwards. I still think that we've got another, you know, maybe another week of us being in these lows, and for the price to maybe even continue down and bounce around in this area, maybe a week or even 2 weeks of us being around in this zone here. You know, but let's see what happens, guys. Hopefully that's helped with some questions that you may have, and I look forward to speaking to you again tomorrow. Always remember, guys, take profits and buy something real. Take care now.